Taking a look at the FX markets today, I want to focus on the British pound. British pound, a pretty big mover, down about 1%, seeing some selling pressure. We're seeing the June contract, that's the most actively traded contract for the British pound, right around the 1.3120 level. We saw a nice range today, a high of 1.3249 and a low of 1.3085. So we're seeing the selling pressure continue. We're seeing the dollar rally today against all the majors primarily. So again, that's another factor, I think, playing into the weakness in the British pound. I do want to point out that you look at the trend of the last month, the low end of the range here, the closing low for that June contract is right around the 1.3066 level. So we're holding just above there, but nonetheless, we're trending back down to those closing low earlier in March. Brexit playing a factor here. We continue to see news breaking on the hourly basis. Theresa May's plan, if it gets passed somehow between now and next week, then you would expect the UK to leave the EU on May 22nd. If it does not, they have until April 12th to get some type of resolution. So you're seeing British Parliament continue to negotiate this plan and try to get some resolution, and with that we're seeing the British pound reacting accordingly to the different votes as they unravel. Also, I want to point out that there's some other data coming out here that should be focused on, not only the Brexit information, but some data coming out from the UK in the next 24 hours that could influence the British pound. And when you look at GDP, final revisions to their GDP number, 0.2% year or quarter over quarter, and you're looking at 1.3% year over year. Now, typically those numbers hold pretty firm. So if we do see an adjustment, I should say, in those numbers, I would expect that's going to impact the pricing of the British pound. And we also have total business investment. That's another number that's going to be rolling out here early in the cycle tomorrow morning. And that's another thing to focus on here. Now, we're seeing a minus 1.4 quarter over quarter and a minus 3.7 year over year expectations. So again, any variance to those numbers, and you expect the British pound to react accordingly.